What happens when one of the world's top software companies faces slowing growth, fierce competition, and a major management exit all at once? Today, we are diving into Atlassian, ticker Team, the software giant behind tools such as Jira and Confluence. Team stock has faced real turbulence this year, down about 40% year to date and about 65% from its all time highs. But is the worst over, or is there a big opportunity ahead? Let's break down Atlassian's quarterly results, its competitive landscape, and valuations to see whether this stock deserves your attention or not. Before we begin, please note this is not financial advice. As always, do your own research before investing. So, what does Atlassian actually do? Imagine you're managing a big project, be it software development, marketing, or an operations project. Now, behind the scenes, Atlassian products like Jira, Confluence, Trello, and Bitbucket help teams plan, communicate, and get work done, from building products to running large organizations. Atlassian's flagship software, Jira, is a powerful project management tool that helps teams plan, track, and release software projects. Confluence is a popular collaboration tool and knowledge sharing tool, while Trello is a simple and flexible project management software that can help organize and prioritize work. Now, over 85% of the Fortune 500 companies use Atlassian tools, with a customer base of over 300,000 organizations worldwide. Atlassian has grown from serving technical teams to powering collaboration across whole enterprises, making the leap from a development tools company to an enterprise software powerhouse. Now, how does Atlassian generate money? It is primarily a software as a service company. They sell software licenses to customers on a subscription basis or a perpetual basis. Atlassian also offers cloud based products, providing customers with the added benefit of easy accessibility, scalability, and flexibility via various pricing tiers. Finally, they offer a marketplace for third party vendors to sell add ons and integrations for Atlassian products, as well as training and support and consulting services to their customers. Altogether, these revenue streams have helped Atlassian become a highly successful software company with a market cap of over $40 billion. Now, let's talk about the Q4 2025 results. What's going on with the team stock? Revenues are up about 22% year over year to $1.38 billion. Quarterly subscription revenue, they had about 23% year over year growth to about $1.31 billion. Now, looking at the statement of operations, you can see here that the revenues for the 3 months ended June 30th went from about $1.1 billion all the way to $1.3 billion. That's a jump of about 22%, as we discussed earlier. The cost of that revenue went up slightly from $217 million to $234 million, which brings the gross profit to $1.1 billion here. There's a moderate jump in terms of research and development costs, which went from $589 million to $700 million. However, the marketing and sales expenses went from $239 million all the way to $314 million, which is about a 30% jump in marketing and sales expenses. So they clearly have spent a bit more money in marketing and sales this quarter as compared to the quarter last year. Overall, the operating expenses went from $981 million to $1.1 billion, which brings us to an operating loss of about $28 million. However, this is significantly lower than the operating loss of almost $67 million last year. Moving on to the balance sheet for Atlassian, we see that the cash and equivalent for this quarter ended June 30th, they have about $2.5 billion in cash and equivalent. and they have marketable securities of about 424 million. This brings the total cash and cash equivalent to about $2.9 billion out of the $3.8 billion in total current assets. They have certain goodwill, which indicates that they have been acquiring companies. Goodwill is about $1.3 billion. The total assets is about $6 billion. Now, as you can see here, for the balance sheet with a size of about $6 billion, they have almost 50% cash and cash equivalent. So I would say this is relatively a good balance sheet, considering that they have almost about $1 billion in long-term debt. So this is a cash-rich company with not a lot of debt. The cash can actually take care of all the debt that they have on their balance sheet. So from a balance sheet perspective, this company looks really strong. I don't foresee this company having any issues if there were to be a recession tomorrow. Moving to the statement of cash flows, they have a net loss of about $24 million. You add back stock-based compensation, add back depreciation, and then you adjust for changes in working capital. And we come to the net cash provided by operating activities to be about $375 million. This is slightly lower than $426 million last year. However, they did mention they are making certain changes in terms of their billings, and that's what led to this change in this quarter. Looking at the investing activities, this company doesn't have any major capex requirements. Most of this cash provided by operating activities actually flows down to free cash flows. They did repurchase stock to the tune of $392 million, which is a very good thing considering that the stock has, over the past one quarter, the prices have been on the lower side. So I like to see management buying their stock when the stock prices are lower. I do not appreciate management who actually buy their stock when the stock price is at an all-time high. So from my perspective, I think this stock purchase makes a lot of sense considering the stock prices has been lower over the past 3 to 6 months. The overall cash flow and balance sheet structure support continued investment in growth initiatives like AI, cloud expansion, and product development without apparent liquidity concerns. However, the softer guidance and then the management changes in terms of the departure of the president led to a sharp decline in the stock price. Shares are down about 40% year to date, and they hit new lows heading into earnings. Margins are stable, but the market is worried about slowing growth. Now let's take a look at the competitive landscape. Who is challenging Atlassian? Atlassian operates in a fiercely competitive space. Their main rivals are giants like Microsoft, ServiceNow, and Salesforce, and additionally GitLab, especially in the development space. I have covered GitLab in a previous video, so you can find the link to that video in the description below or on the right here. Atlassian stands out for deep penetration with technical teams and its teamwork graph AI, which can connect work and knowledge across project-based organizations, something rivals haven't yet fully matched. That said, Atlassian's growth is heavily reliant on Jira and Confluence, and expanding beyond technical teams remains a challenge. Now, let's take a look at the valuation for FY26. They expect revenues to rise about 18% for FY26, which will bring revenues to about $6.14 billion, with a GAAP operating margin of about negative 2.5%, which has translated to a free cash flow margin of roughly 27% in FY25. Assuming similar free cash flow margins for FY26 leads us to free cash flows of about $1.65 billion in FY26. Applying a 30 times multiple gives us a market cap of about $49 billion, which is roughly 18% higher than the current market cap. Now, 18% return in 1 year beats the index hands down on an average year. Now, if I take a look at the long-term chart of Atlassian, so this is the monthly chart for Atlassian. As you can see, this stock made an all-time high of about $480, and this was in way back in October 2021. After that, the stock went through a bit of a correction phase, and it bottomed out close to $115 in November 22. Since then, on a monthly chart, it seems to be making a higher high and higher low. This is where the stock bottomed out close to about $115. Then it made a high January of 2024, followed by a low about 135. This is a higher low, right? $135. This is higher than $115. This was followed by higher high. This time around it was $326. This high being higher than high number one. Now if it is able to get support around the 150 and 160 area, and reverse course and go on to make another higher high, higher than $325, then this trend of higher highs and higher lows is actually intact, and we can get way better upside. Let me remove these indicators here. If you take a look at this chart, we see that there's a strong support area around 150 to 160. Here I've connected the lows, the previous two lows, and we see that, this trend line also kind of has a bit of a confluence with the support zone here. If the price is able to get a bit of support here and then reverse course, then there's a potential for this stock to go higher than $325 over the next 6 months to about a year. So let's take a look at the key takeaways. Atlassian is at a crossroads. Leadership in technical teams and innovative products versus increased competition and tough guidance. If new products and AI unlock new customer segments, significant upside remains. But if growth keeps decelerating, expect more volatility ahead. So what do you think? Is Atlassian's slowdown temporary, or is Microsoft unstoppable in the team collaboration space? Drop your thoughts in the comments below. Also, it takes a lot of effort and research to do these videos, so would really appreciate if you can hit that like button, and please do subscribe to this channel. Also, do check out my video on Atlassian's competitor, GitLab, which I have covered earlier. I'll put the link in the description and also on the right here. Thanks for watching, and see you in the next one.